You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Daniel O'Brien. Daniel, thanks for joining us today.
Thank you, Shelby.
Daniel, looking at the grain markets, where are futures at?
Well, futures are at so-so levels. We've had in the last week some movement to the high side, some upward movement in corn futures, hard red winter wheat, and also soybeans. And uh, uh, a lot of that has to do with the uh, I guess, trade negotiations that the U.S. and China are having. Reported good news yesterday that came out, and we have general details that are coming into play. For soybeans for sure, perhaps on grain sorghum, there's little sketchier reports on that, where China, after buying essentially almost none of those, essentially none of U.S. Sorghum or soybeans for the since the beginning of these trade negotiations, is giving every indication that they've re-entered the market. In fact, prior to the beginning of these negotiations, China had come in and had bought some soybeans as kind of a goodwill gesture, to restart that. So, really good news in terms of usage. I would say that couldn't come at a better time for Kansas soybean and grain sorghum producers that in terms of as grains are coming have already come out of the field or are coming out of the field. If this news of a positive movement in either in well in all amongst all these crops, but for sure in terms of sorghum and soybeans, if that comes to fruition, then it could give us strength in the market, a boost to the upside, and give us some amount higher prices to sell at. And again, so often, so much of the decision making mode right now is that gosh, I either have harvested this and I've got have harvested those crops and I have X days of free storage that I need to make a decision within before they start charging on a daily basis storage costs in commercial facilities as opposed to and well, on-farm storage also is a factor, but really you have the likelihood of the beginning of storage costs coming in commercial facilities, and if this news coming into the market can give us a price boost, I think that helps farmers that don't that do want to generate cash to have a better set of options than we were looking at before, where we were just really bearish on any export prospects, and prices were drifting lower at that time.
What have been some of the prices then when we look at cash?
Cash prices uh, for corn, we see in the highest price for corn on as of yesterday, which would have been Thursday the 30th. We did see cash corn price get back above $4 in some locations, 4.20 in the Garden City area. That's a 10 cent under basis. That's still arguably 30-40 cents weaker than we normally would see for corn historically in Garden City over the last several years. 405 in Colby and in the northwest part of the state, Pittsburgh at $4, and 391 in essence as the strongest prices in the Salina, Topeka, Hutchinson areas. So not bad. We're also tracking new crop bids for next year already. Here's You've got this harvest in. We're already projecting out to where things could be, and we do have I guess the highest bid is about 465 also in that Garden City area. That would be for harvest of in fall 2025, 2026. Now, and really the issue that I'm watching closely would be for both for sorghum and for soybeans. If we see hints in some of these in some of the cash bids, upfront cash bids that that we're seeing that basis is narrowed up, that there'd be some demand pull happening in the elevator system because hey, people are approaching them to try to move sorghum down the way, then we'd be looking for whatever might come there. I do see in the Hutchinson area yesterday's price. We had a high of 366, which is 64 under, and a week ago, well, it was about that a week ago as well, but 366 in the Hutchinson area is still the leader for us cash wise and in the sorghum market. Highest price yesterday was 341. In the next highest price is 341 in the Salina area, 331 in Topeka, and 325 Garden City, 320 Colby, 315 in Pittsburgh. So again, sorghums, Canada. You've got a situation with these sorghum prices where we are certainly covering the direct costs quite well, but we're not at that price. We take whatever we can get over direct cost production for grain sorghum, then we apply it to machinery and to land and to family living. So so at least we're covering direct costs and have something to go forth with to cover other aspects of the cost structures. And we'll see. If I think the thing to watch, Shelby, over the next month or so will be the strength with which China would come into the sorghum market, buy a fair amount of that, and give us a basis improvement of 10, 20, 30, 40 cents. If they really come strongly in, it could be even more than that. And if that's the case, then people that grew sorghum, and again, grew sorghum in Kansas. We've had a good crop this year in many parts of the state. We'd have a lot better opportunity for decent selling prices than we have right now. On the soybean side, highest bids in the state yesterday, 1032 again in the Hutchinson area. Pardon me, 1024 Pittsburgh and Pittsburgh, Kansas down southeast, 1017, 1018 in Salina and Topeka. And for wheat, we still aren't seeing prices over $5, but the highest prices we do have, at least at this time, 468 in both Salina and Hutchinson, 473 in Topeka, lesser prices elsewhere in the state. So kind of in the mode of waiting to see I think the export movement that's coming in. By the way, the government shutdown is putting us in a situation where we don't have strong information to know whether the strength that we'd had earlier in hard red winter wheat exports before that was being reported by these on a weekly basis by the USDA prior to the shutdown, whether that's continued or not. I think we've no doubt had some buying, but I'd be buying that's occurred, but I would be really curious to see once we do get that information back, what the pace had continued to be during that time frame, and we shall see. I do want to mention that we're at the mode now, and at the time right now where it's the USDA and USDA National Ag Statistics Service would be going out into the fields about now in a regular mode to go out and do their enumerated samples of what their crop test plots are for yields. They'd be sending out surveys to farmers to find out what their expectations are or what they've observed from their harvest numbers are around November 1. Well, gosh, it's almost November 1 and we're not seeing much action. So I think we're going to be watchful to see whether we have any type of a USDA crop production report that we could use then to feed into the WASDE report that's scheduled to come out on November the 10th. So it's dicey at best right now that we'll have that report, and really it just pushes things back towards the next set of numbers. It's probably December, that would be the December 9th crop production WASDE reports, and we typically don't have much happening during that report. But given the different extraordinary circumstances we're facing this year, the importance of that December report could be really heightened. And if that doesn't happen, if we don't put crop production numbers out in the December report, then all of our chips, I guess, are all of the risk and uncertainty in the market will happen out there sometime. about the first 2 weeks of January, and uh, that would put us in the mode of having the potential for a lot of crop volatility if by the time we actually measure what type of corn and soybean crops we've had in the U.S. If we find out that as is kind of under the radar expected that gosh, late season yields probably aren't going to have proven out to be as good as USDA was projecting earlier. Well, that's a fairly that's an interesting. We'll just say it's an interesting scenario to consider. That we could be having tighter stocks to use than we had by the time we get to January than we had been reporting in September. And oh yeah, the first time we have verification would actually be in January. That would be that's like I say, just potential for a lot of volatility in the markets. And if people are storing grain that long unpriced, then gosh, it just puts the onus on that January report that to give us some guidance and I guess we'll just be polite and say we could go any which way in any which direction if that ends up being the case.
Are there any trends or movement you're watching in the market to see what's going to happen as we do look forward?
I really watch the relative strength indices on grain futures movements. For instance, for D's corn futures, we had an RSI on a scale of 100 to 0, with 0 being very declining prices, bearish markets, 100 being full bore bullish markets. We've had a relative strength indices for D's corn of about 59, so slightly positive. When you look at wheat, the wheat number during that same time, it's also about 57, 58 percent. So a positive number in the wheat market. When you look at the charts for both of those, we've been jumping. Well, for corn, we've jumped about 20, 30, 20, well, 20, 20 or 25 cents over the last bit of time here. So really pretty positive move in the market. Where you really see an optimistic market, strong movement is in soybeans here, where we've had about 77 on a scale of 0 to 170, 77% RSI. So strong bullish markets. In fact, here in the last bit of time, we had a gap. If our people are technical chart watchers for November soybeans, we've got a gap that's where we've jumped higher and in a discontinuous manner on that chart. Closed yesterday again at 1091 and a quarter. Had been trading at about 1030 or so, or 20, 30 cents or more lower than that just within the last week. So this news of the potential of China re-entering the market in a tangible, significant way and buying soybeans has had a big impact on things. Now, so we're buying the rumor. We'll have to see what the fact is by the time we actually get 1 or 2 weeks down the road.
Daniel, I appreciate you taking the time to join us.
Thanks so much, Shelby. I appreciate it.
That was K State grain economist Daniel O'Brien. We're cutting to a short break now, but we'll be right back.